Imagine waking up and realizing you could legally save thousands of dollars in taxes each year. Wouldn't it feel like hitting the jackpot without buying a ticket? Did you know that the wealthiest 1% manage to save billions through tax strategies that are entirely available to you? What if I told you that with a few small tweaks, you could join the ranks of those who know how to keep more of their hard-earned money? If you're tired of working hard, only to see a big chunk of your income go to taxes, stick around because in today's video, I'm going to break down 12 powerful and legal ways to pay less tax, no matter where you are in the world. These are the same methods used by the rich and powerful, the kind of tricks that could make your jaw drop. The best part? They're all within your reach. But here's a shocking fact. According to the Tax Foundation, the average person works over 100 days each year just to pay their tax bill. Imagine spending a third of your year essentially just working for the government. If that doesn't make you want to take control of your finances, I don't know what will. So, if you're ready to stop being part of the 70% of people who unknowingly overpay on taxes and instead become part of the savvy 30% who actually keep what they earn, keep watching. Know your tax deductions. Let's start with the basics. Tax deductions. It sounds boring, right? But did you know that according to a survey, nearly 45% of people don't even know what deductions they're eligible for? The reason is simple: tax laws can be complex and overwhelming. But listen to this. Every year, people leave billions of dollars in deductions unclaimed. That's money you could have used to take a dream vacation, save for your child's education, or even retire early. Let's look at some of the most common deductions people miss out on. Do you work from home? You could be eligible to deduct a portion of your rent, utilities, and internet bills. That's right. You could turn your home office into a powerful tax-saving tool. Did you pay for a course or workshop that helps you earn more income? Well, guess what? In most countries, that's tax deductible. Investing in yourself pays off in more ways than one. And there are many more deductions out there: healthcare costs, childcare expenses, and even the interest on your student loans. Every deduction you miss is like giving away free money to the taxman. Do you really want to do that? Be smart about tax credits. If deductions are the appetizer, tax credits are the main course. They directly reduce the amount of tax you owe, dollar for dollar, or pound for pound. Here's where things get really juicy. The difference between deductions and credits is huge. A tax deduction reduces your taxable income, but a credit reduces your tax bill directly. For example, if you have a $1,000 credit, that's $1,000 saved, period. This is one of the most underutilized credits. According to IRS data, 20% of eligible taxpayers never claim it. If you're earning below a certain threshold, you could qualify for this significant boost to your refund. Installed solar panels or energy-efficient appliances? You might be eligible for significant credits in many countries. The world is going green, and governments want to reward you for it. For families, this credit can be a game changer. It's not just about saving money. It's about keeping money in your pocket for the people you care about most. Take a moment to think about this. Over $10 billion of potential tax credits go unclaimed each year because people simply don't know about them or don't understand how to claim them. Don't let that be you. Leverage tax-advantaged accounts. When I say that there are places you can legally stash money away without paying taxes on it, you'd want to know more, right? Retirement accounts. Let's talk about retirement accounts, such as IRAs in the US or ISAs in the UK. Contributing to these accounts not only helps you build wealth for the future but also reduces your taxable income. You get to grow your investments tax-free until withdrawal. Health savings accounts, HSAs. If your country offers an HSA or equivalent, it is one of the most tax-advantaged ways to pay for medical expenses. Contributions are pre-tax, and withdrawals for medical expenses are tax-free. It's a double win. Education savings. If you're saving for your child's education, there are likely specific savings plans available that allow your contributions to grow tax-free. Take advantage of them. Remember, these accounts are designed for the long game. The earlier you start, the more you save in taxes, and the wealthier you become. Imagine the compounded effect over 10, 20, or even 30 years. More money for you, less for the taxman. Residency and location tricks. What if I told you that where you live could be costing you thousands in unnecessary taxes? Yes, residency and location matter a lot. Tax-friendly countries. Countries like Monaco, the UAE, and Panama have zero or low personal income tax. If you're a digital nomad or have location flexibility, you could potentially save tens of thousands every year just by changing where you live. In fact, there's a whole movement called tax arbitrage, where people move from high-tax countries to low-tax ones. State or provincial taxes. Even if you can't move to another country, you can consider moving to a different state or province. For instance, in the US, states like Florida, Texas, and Nevada have no state income tax, unlike California or New York, where rates can soar to over 13%. Double taxation treaties. If you're living abroad, make sure to check whether your country has a double taxation agreement. This can prevent you from being taxed twice on the same income. There are over 3,000 such treaties worldwide. Imagine being able to take an extended vacation to a beautiful tax-free country and coming back wealthier simply because you saved on taxes while you were there. It's not just about saving money, it's about the freedom to live where you want while keeping more of your wealth. Invest in tax-efficient ways. Tax-efficient investments can significantly reduce your tax bill while helping your wealth grow. Index funds and ETFs. Did you know that investing in index funds or ETFs can be more tax-efficient than investing in individual stocks? These funds generally have lower turnover, which results in fewer taxable events. Tax loss harvesting. This strategy allows you to sell investments that have lost value, offsetting your gains. It's estimated that smart investors using tax loss harvesting can reduce their taxable gains by 10% or more annually. Dividend stocks. If you're in a country that offers lower tax rates on qualified dividends, you should definitely consider dividend-paying stocks. The income is often taxed at a more favorable rate compared to regular income. According to a Vanguard study, proper tax-efficient investing can boost your annual returns by 1% to 2%. That doesn't sound like much until you realize that over 20 years, it could mean tens of thousands of dollars. Smart use of debt. Debt isn't always the villain. It can actually be your best friend when used smartly. Mortgage interest deduction. In many countries, you can deduct the interest on your mortgage, which means that owning property becomes more affordable than renting, from a tax perspective. Leveraging real estate. Wealthy individuals often use leverage, borrowing money to buy real estate. Why? Because mortgage interest is often tax deductible, and rental income can be shielded by depreciation deductions. Consider this. By using debt wisely, you could own multiple properties, have tenants essentially pay down your mortgages, and gain deductions on top of that. It's like using other people's money to create your wealth, and the taxman is helping you do it. The magic of charitable donations. Giving is living, and it's also one of the best ways to pay less tax. Donor-advised funds. Instead of giving directly to a charity, you can contribute to a donor-advised fund and receive immediate tax deductions. It's like your personal charity account where you can donate when you feel the time is right, but still get the tax break today. Donating appreciated assets. Instead of giving cash, consider donating stocks that have appreciated. By doing so, you avoid paying capital gains taxes, and you still get to deduct the market value of the donation. Charitable trusts. If you're truly committed, setting up a charitable remainder trust can be a great way to reduce estate taxes, ensure income for your loved ones, and give back to society. Imagine not only reducing your tax bill but also knowing that your money is making a real difference in someone else's life. It's a win-win for everyone, and it adds a deeper meaning to your wealth. Consulting with tax professionals. It's said that knowledge is power, but applying that knowledge is what makes all the difference. Tax professionals versus DIY. According to research, individuals who hire tax professionals save, on average, $2,000 more per year compared to those who do their taxes themselves. Specialized tax consultants. If you have unique situations like foreign income, rental properties, or significant investments, a specialized tax consultant can save you a fortune. For instance, expats who work with specialized tax advisors are 40% less likely to face double taxation issues. Let's face it, the tax code is complicated, and unless you're ready to make tax law a second career, hiring someone who lives and breathes this stuff can be one of the best financial decisions you ever make. Leverage business ownership. Have you ever wondered why so many wealthy people own businesses? The answer is simple. Business ownership comes with tax advantages that ordinary employees can only dream of. Deductible expenses. Business owners can deduct everything from office supplies to travel expenses and even meals with clients. Imagine reducing your taxable income by thousands just because you have a legitimate business meeting over a nice meal. Home office deduction. If you run your business from home, a portion of your rent or mortgage can become a business expense. It's like getting paid to work in your pajamas. Hire your family. In many countries, hiring your spouse or even your kids to help with your business can be a tax-saving move. You can pay them a salary, which is a deductible expense, while shifting some income to a lower tax bracket. Studies show that business owners are, on average, able to reduce their tax burden by as much as 25%, just by utilizing these deductions. Offshore accounts and international strategies. Yes, offshore accounts can be legal, and they can save you money if used correctly. Banking offshore. Countries like Switzerland, Singapore, and the Cayman Islands offer low tax rates and strict privacy laws, making them popular choices for offshore banking. Offshore trusts. Setting up an offshore trust is another way to minimize taxes, especially when it comes to estate planning. Before you get scared, remember, this isn't about hiding money. It's about maximizing what's yours within the law. A recent survey revealed that 62% of high net worth individuals use some form of international tax planning to lower their tax burden. Why shouldn't you? We've gone through 12 powerful ways to pay less tax anywhere, and here's the reality. Each of these strategies could potentially save you thousands, if not tens of thousands, of dollars. But knowledge alone isn't enough. You need to take action. Picture this. You could be spending more time with your family, traveling the world, or investing in your dream venture, all because you took control of your finances today. Start small, pick one strategy from this video and implement it now. Every day you wait, you're giving more of your money away to taxes that you could have kept. And if you found value in this video, share it with someone who might need this knowledge. The more people who understand these strategies, the fewer people will have to overpay on taxes. Don't forget to like and subscribe, so you don't miss our next deep dive into wealth building and personal finance. See you next time, and here's to taking back control of your hard-earned money.